And with that, welcome to another podcast from Northern Finance. Today I have Valter here. He's a board member of Creditstar Group, one of the largest loan originators in the Baltics. He has over 10 years of experience at Creditstar, and prior he was the Chief Business Development Officer. Valter, great to have you here on the podcast.
Thank you, Alex. Nice to be here, and happy to give interested possible investors an overview of our company Creditstar and investment possibilities through private debt placements.
Yeah, private debt placements. You just said that's the thing we want to talk today about. And my first question would be to you. So, how do these private debt placements work, and why does Creditstar, as a big group, even use them, and not only bonds, for example?
Sure. So we do name them a few different versions. This particular type of investment, we call them direct corporate loans or direct loans, or yes, private debt placements, shortened as PDP, perhaps, as it's convenient to refer to this during our talk. So this instrument is part of the financing mix or financing instruments mix that we offer to our debt investors. It is used as part of our diversified funding strategy. And currently, it's the third most significant financing source to Creditstar after bonds and peer-to-peer platform-based financing, with roughly, I would say, in the value of currently active direct loans of around 35 million euros. They work, the private debt placements work most similarly to bonds with regards to investors' formalization and signing process, interest payouts, and principal repayment. So these three areas. So firstly, investors' formalization and signing. This is handled by our investor relations team by a few interaction steps. Firstly, the investor submits their interest to invest through a designated web form at our corporate landing page / direct loans, including investment amount and duration. Thereafter, the investor relation team sends the investor our standard loan agreement, conducts AML KYC process, and finally, a mutual signing of the contract takes place. Secondly, the interest payouts to investors, they happen according to a predefined schedule, which is regularly at the last day of each calendar month. And thirdly, the repayment of the principal invested amount is done as a bullet method in one go at the end of the contract period. So similarly like bonds.
Okay. So you already made this comparison to bonds, and just for me to understand it a little bit better. So are these PDP then comparable to bonds or investments in Mintos notes? Maybe some people who are watching this video, listening to this podcast, maybe they have already invested in Mintos notes from Creditstar. What differentiates the PDP from Mintos notes or bonds exactly?
Yeah, so like I explained in the previous answer, PDP is most comparable to bonds when it comes to all aspects of the investment process. In fact, actually, our investors consider it as a simplified method over bonds. Well, with bonds, there is a requirement for the investors to have a Baltic securities account, either directly or via nominee account of investor's bank, which enables the investor to hold securities settled by Nasdaq CSD, which is the holder of but typically this limits the investor's geographic coverage. And what we see from the PDP is that most popular it is within the countries outside of the Baltic states. In comparison with Mintos notes, the PDP as well as bonds are classified as a way of corporate investment versus a direct investment into specific loans. This means that unlike at Mintos, the investors do not choose a particular set of issued borrowers' loans to invest into, but instead they invest into Creditstar as a company via that instrument. So the difference in between PDP versus both bonds and Mintos is that PDP investments are unsecured, while the first two are backed by their respective collaterals. However, this is compensated by a higher yield versus bonds. And the comparison here goes with bonds due to most similarities with that instrument as explained earlier.
Okay. And thank you for that explanation. And you just said that the yield is a little bit higher than on the bonds because of the lack of securitization. So why should investors use PDP with an interest of 14 to 16% per annum that is offered currently in this offer we have down there in the video description? Why should investors use this offer when Creditstar Finland offers 17.5% interest rate on Mintos right now, starting at €50 investment?
Yeah, good question. This we also get to explain to our potential investors quite at several occasions. Yes, there are differences to investing into PDP versus investing on Mintos platform, and in several ways it is different. So in the case of PDP, the interest rate is fixed for the entire duration of the loan. This means that as an investor, you can predict and expect consistent monthly interest payments, as well as lump sum principal repayment, or the bullet, at the end of the loan term, which means that it provides more certainty and stability, allowing you to plan your cash flows and the returns more accurately. On the other hand, investing at Mintos exposes you to loans with varying interest rates. So while you may have some loans with higher interest rates, others might be significantly lower, and the actual return on your investment depends on the demands of loans on the platform and the mix of interest rates you invest in, which means that your returns may fluctuate over time, making it like if to take a bit of a longer horizon, it might be a bit more challenging to predict your cash flows and overall returns. Or in the given example of Creditstar Finland and 17.5% of interest rates, I would say that there is a batch of loans provided with that yield, possibly driven by campaign offer, for example. And at the next moment, there won't be any more such loans available to invest with. And the investors might need to add some other yields into the mix. Furthermore, perhaps to add, Mintos, the schedules or the repayment schedules at Mintos platforms are not as rigid as in case of PDP. So in Mintos's scenario, your payments depend on the actual payments made by the borrower. So if a borrower misses a payment or defaults on their loan, it could affect your repayment schedule. Whereas in contrast with a PDP as a corporate instrument, it has a predetermined payment schedule and offers more predictability. Platforms like Mintos may reduce also interest rates for short-term loans in response to market conditions, but the direct loan agreement with a fixed interest rate remains unaffected by market conditions, and it offers more consistent returns. So in summary, PDP with its predetermined payment schedule can be better solution for investors seeking stability and predictability. While there may be offers with higher interest yields on Mintos in some instances, they also come with more uncertainty due to borrowers' repayments and fluctuation in returns due to possible changes in market conditions if to take a bit of a longer period. So it's more stable, perhaps, to say. It's like more like a fixed instrument in this sense.
Okay, okay. Thank you very much for that. And when we take one more look at the difference to the Mintos notes in terms of risk, securitization, and investor protection, what can you tell us about the differences of PDP compared to Mintos notes, just because it's the instrument investors have been using so far and are quite familiar with?
Yeah, yeah. Okay. Well, standard investment risks apply to both, such as market risk, liquidity risk, etc. Mintos notes they are backed by loans. The associated claims are secured by established pledges and group guarantees. But in the case of PDP, we have specific covenants in place similar to the ones we include in our bonds issue terms, which the company has to abide by for the duration of the investment period. So that actually imitates the securitization of the bonds, while it is yes, ultimately unsecured instrument.
Okay. And let's say I invest into a PDP with Creditstar now and decide to do it basically. So I've invested the money. What happens after that? I get my regular payments, but do I also get regular information like updates? Like what can investors expect when they put their money with you through PDP?
The investors can expect quarterly updates in the form of interim reports detailing the key financials on the group level and other relevant highlights. And also we share with the PDP investors our annual audited financials, which we publish once per year. So I would say the frequency is on a quarterly basis, and sometimes a few more pieces of relevant information get to be added.
Okay, okay. And let's say I'm invested again into PDP, and on Northern Finance, the big thing every investor wants is passive income, right? Having income come in without putting in too much work, just letting your capital work for you. So can these PDP also automatically roll over, let's say every 1 year or every 2 years, how long the period may be? And can they then be used for passive income?
Yes, short answer. And if to elaborate, then the standard contract for PDP indeed has an automatic prolongation clause. And the investors would need to notify 3 months in advance prior to the end of the contract in order to waive that. In terms of the duration of the contract as such, we offer quite flexible solutions actually to the investors, which are also listed at our landing page in a drop-down selection. So investors can commit into 5 months, 7 months, 9 months, 12 months. And then with this automatic prolongation clause, it can proceed thereafter. And typically, we do see investors using the automatic rollover and continue to earn good and predictable interests across, I would say, multiple years.
Okay, okay. And if we look at the interest rates for PDP in general, might they also be higher than in Mintos in the future?
Hard to tell. Hard to tell as both Mintos and PDP are ultimately driven by our investment appetite, market conditions, and the financing instruments we have available at the given time. So we are moving towards an institutional credit facility at Creditstar, which will affect our cost of finance positively and is likely to reduce our appetite across all other financing channels. Meaning that in medium to long perspective, the interest rates are expected to go down everywhere. That's what we're working towards too. But until then, the PDP interest rates are likely to remain slightly lower than the offerings at Mintos. However, the explained considerations of predictability and stability need to be factored in for the benefit of PDP.
Okay. Okay. And one last question that sparked up in my mind before we get to the end. So when we consider the situation on Mintos, all of the pending payments have been paid by Creditstar that were due. So that's, first of all, very nice. I made a own video about that recently, just 2 days ago. And were also the investors in PDP also, let's say, pushed a little bit further down the road with repayments, or were they always paid on time in these last months, let's say?
So with this diversified funding strategy, one of our objectives is to kind of have all of the different funding instruments autonomous, meaning that I mean, at some points, if there are critical needs, we of course try to support and compensate the financing mix with our other funding sources. But otherwise, the development, the financing, let's say, improvements and liquidity improvements are going towards to like channel by channel specifically. And peer-to-peer platforms as such are, well, they are different because the dynamics of the cash flow is like, yes, very much related to how the portfolio behaves. And in order to sustain our portfolios, not to have them reduced, because ultimately keeping a portfolio level and increasing a portfolio level is crucial for us to earn interest, so that we would be in the position to pay interest to our investors. So ultimately, it's like beneficial for all. And the peer-to-peer area has had its like very strong separate focus, while the PDP as like I mentioned, it's the third most important funding source, has been a bit like isolated or being autonomous, and being perhaps also not so big as peer-to-peer altogether, meaning that perhaps like less prone to risky conditions. This one has been kept stable and autonomous.
Okay. Thank you very much, Walter, for being so transparent. Do you have any other things, any other comments, anything you want to tell investors at this point?
Yes, well, this is perhaps more of a kind of like an investment legal type of an information, just also to say as a disclaimer, important to note that PDP is not an investment service as such, which we offer to everyone, but rather an opportunity for the interested parties to reach out to us to inquire about the possibilities of making an investment into our company. And such interested parties would have to carry out our relevant AML KYC processes, and we shall have the discretion to enter into direct loan agreements with them on a case-by-case basis. So there might be some, let's say, extreme situations whereby we're not able to admit investors. Just a note.
Yeah, I understand that. Okay, thank you very much, Walter, for taking the time and answering all of these questions in detail. I really appreciate it. And I wish
Thank
you
you.
all of the best at Creditstar with private debt placements and all other sources of financing for you guys.
Much appreciated. And hopefully we get good interest also within your listeners.
That's right.